Hi, thanks for tuning in to our Practical Nerds weekly podcast. I'm Shub, and together with my partner and co host Patric, we normally invest in founders in design, construction, renovation, and logistics technology. Many of our friends in the ecosystem wanted us to start a podcast on the built world, and in return, we decided to honor their request with a show about nothing at all. I really like listening to that intro, Patrick. And I think it reminds me that, even though we talk about nothing, but we also like going in as much as we can into the Seinfeld universe.
It's one of the key aspects that I also enjoy, and I think we'll have a lot more opportunity to nerd out here and elsewhere about us being Seinfeld fanboys. I know you like Curb a lot. It's still on my watch list.
Oh yeah, I think once you've watched that, I think we'll inject some stuff from the Curb universe as well.
Okay.
So Patrick, I mean, we've been doing Practical Nerds for a while now. So for folks who followed us from the early episodes, you know that one theme that was very strongly represented, especially in our first year or so at Practical Nerds, was the evolution of the new 3D design and data infrastructure space in AEC. Think software solutions, tooling solutions, AI enabled, etc. We're proud to have backed several such firms in our portfolio, have had two, I believe, Patrick, portfolio founders from that space, both of whom are doing very well, also as guests on Practical Nerds before, and very happy that we have backed such firms. I think the recent few months have been quite interesting, Patrick, as a macro observation and from what we've seen in our portfolio. So I thought that would be a good moment to, I guess, refresh our thoughts on the space and what we are getting to see through the eyes of our portfolio founders and other founders as well.
Yeah, let's chat about three things in that space because there's renewed strong momentum in it. So maybe let's chat first what we have been seeing on commercial momentum in the market, not about specific portfolio companies. Everybody knows our portfolio anyway, but it's also not just end size one. So let's talk about just what we see in the market.
Yeah.
Then two, we can talk about. I really was intrigued by the Consigli acquisition by AECOM. Let's discuss that. Give it a wider context. It's not about the Consigli. And then three, why we actually, and I think it's time to remind ourselves and perhaps renew or abandon that conviction, why we always thought that specifically data infrastructure, systems of record, what I lovingly call bathtubs, but applied to the CAD space, are so valuable, and specifically authoring tools, what role they will play in whoever builds a $100 billion business in CAD, why having the new age authoring tool in the middle of that is such a valuable thing. So let's talk about these three things. And on the commercial side, let's start with that. I can kick us off, right? So you and I, we've been on this journey with these companies for a long time. So for us, with Snaptrude, you've been actually following them since, if I remember correctly, 2017 or 2019. So yeah, either one of the two.
So 2017/2018, yes.
Yeah. So since then, you have been building a relationship with Altaf. Then we invested years later only. So we didn't immediately invest. Speckle, we've been very proud shareholders since 2020 and Rayon since 2021. Calctree 23, 22?
Correct, 23, yeah.
Yeah. So, and then many of our friends have been building in this space, like Moritz from Enscape is another example. And we've been on this journey with these founders for a long time. And one of the things that just rings true is it takes a lot of product to be built to actually have a minimum feature set that is viable enough for customers to replace a subset of either software or work that they need to get done with the emerging challenger in this kind of a market. So it's even in an age of AI, once you touch geometry, once you touch authoring, once you touch data infrastructure of geometric data, it's not like, okay, let me lovable this, let me vibe code this. Okay,
Yeah.
believe me, it's not working that way. So this whole, there needs to be a lot of product being built, is still valid today. And it certainly was valid for all of these companies. Even if you rethink the Onshape story, which eventually realized a couple 100 million outcome after also having raised 100 million plus, that took like 5 years until they had product fidelity to actually be enterprise ready. If you remember that journey. I can't remember what people told me because this was, before my times in this profession, how long Revit took to actually build. I imagine years.
Yeah.
Figma took years to actually, until they crossed even 1 million in ARR. Still true today. But now we're seeing it actually debottlenecked across a spectrum of companies where initially we saw a lot of grassroots up, bottom up adoption, both from within enterprise, grassroots up, as well as a long tail of users from academia through freelancers, through SMB adoption, etc. We've been seeing that for years, plural, in that space. But obviously, these are not the high quality revenue only that you want. There's churn. Sometimes it's project based with these very small companies. Academia churns out at the end of the semester. Important to get that usage and the telemetry, important to get empathy for also future users that might graduate into enterprise, Microsoft model.
Yes.
But ultimately, the highest form of revenue that you need to aspire to build a large outcome in this space is in the enterprise realm. And this is where we have seen immense movement in the last year. So across the companies that I work with and then over to you, I'm seeing like 300, 500,000 ACV deals routinely now. I see it really flying off the shelf. I see top tier logos from AE firms, but also a lot from general contractors sign with our portfolio companies in this space. And that's a completely new momentum on the enterprise side that was not there 12 months or even 12 months ago.
Yeah.
And it's not a fad. It doesn't feel like one to me. It doesn't feel like, okay, here's now a small set of early adopters. It's actually, I'm seeing it very repeatable. I have one of my portfolio companies sign routinely 200 to 300,000 new enterprise ARR in a down month right now. And that started really 12, 13 months ago. One, because they were product or enterprise ready. But also two, because I genuinely believe the customer landscape is much more adoption ready in the last year. How has it been for you?
I have to say very similar. So I think, as you rightly pointed out, I think it needs the meeting of both sides for a successful deal to be struck. And the two sides being, one is the product and the firm needs to be ready for enterprise grade deals and to institutionalize the product at that scale and that level of fidelity. But the other also is you need a situation where the customer doesn't take you on a very long multi-month, multi-quarter journey to discover what might be a deal, right? And you're absolutely right. I think one case I recall from our portfolio in the sort of deal ranges you spoke of in the 200 to 500K ACV range, it closed within days, Patrick. I think less than 2 weeks from start to finish, which is quite extraordinary, considering what we normally have thought of in this space and what has previously happened in this space in terms of trying to pitch for deals of this sort. So I think what seems to have materially shifted, not to undermine the incremental improvements in these firms becoming enterprise ready, but something has definitely been switched on at the customer's ends to desperately want to adopt, verify, of course, test, verify, but then immediately adopt and move to commercial sign up. I think there's been a material step up there.
And that's not something that you saw happening in those firms 12 months ago?
No. That's a definite and completely unambiguous shift that has happened more recently.
Yeah, interesting. I mean, that's a very fast sales cycle for such an ACV, I have to say.
Yeah.
I wonder what has changed. I mean, do you just think it's, Consigli? I mean, I can't imagine that. That would be almost too silly of an explanation.
So So I think just that alone, I agree with you. I think that wouldn't be an explanation. I think there might be some underlying either factors or beliefs at the second or third layer of that announcement, which I think are slightly rewriting the landscape a little bit. And maybe I can use this as an opportunity to tie it back to what you said earlier about how Consigli might affect or not affect this situation. So
Sure.
I think there's two aspects perhaps to dig into with the Consigli acquisition. First is the deal and the acquisition value and so on. The other is how the deal was, I guess, justified or explained,
Mm,
right? And I think both
mm,
have very interesting dynamics to them, which I thought was very revealing and comes at a very interesting time for the industry.
mm,
So first, let's pick the value. So I think for folks who've uh, have not followed the deal, so Consigli eventually got acquired by AECOM for an amount of approximately $390 million, give or take, which it's a very handsome acquisition, undoubtedly.
great
And
outcome for the founders.
and we know of strategic firms who could be potential acquirers or could have been potential acquirers for Consigli who were in discussions with the firm earlier, like a year or more earlier, and who were in discussions for a completely different number,
Hmm.
and who were genuinely surprised by the outcome eventually with the AECOM, which for me was interesting because, and this is one of those, we talk about VC being like a indeterminate game and not being perfectly defined. But even when you talk of like strategic M&As, it goes to show there is such a wide spectrum in what strategic premiums actually means, what value a solution represents in a certain company's within a certain company's family or with under that business, and that also has a wide spectrum. I'm not an M&A expert, so I don't know to what extent there's science involved in it, or if there is any science involved in it. But certainly there is seems to be quite a range, and it seems like that spectrum, uh, because of the asymmetry, it also calls into question. I think folks at the lower end of that spectrum also often end up asking themselves, hey, what have we missed? Right? Is there something we are not realizing about the future, which is what we need to catch up to understand what value we could have harvested out
Hmm.
of such solutions?
So I was actually, as you were speaking, building on that, I was
Hmm.
actually reminded of an article and a thesis I published
Hmm.
in 2023. So I'm just sharing the screen for anyone who is on audio, maybe switch to video right now. So May 4th, may the force be with us. I
Very nice.
published in 2023 my thesis of why the 3D CAD design stack is under attack, part 2. So I'm skipping the metaphor, and they are life critical functions, which I'm skipping as well, and I'm jumping to thesis number 2. And that is that in the product stack, and I highlighted here, Shub, I predicted in 2023 is that architecture firms, general contractors, design firms using CAD are reevaluating their IT spend, and we're going to see a reevaluation and reallocation of the entire IT budget. Reevaluation of the entire IT budget and reallocation of some of the IT budget in the time frame 2025 to 2027. As expected. Sorry, on this one here, I'm patting my own shoulder. So this is, and I didn't pull that out of my fingers, right? So this was actually something that back then was justifiable to be happen or foreseeable to be happen, because the big teaser rates that you had with some of the incumbents or just one of the incumbents at the time was actually going to run out 25, 26, 27. The same incumbent was already on path to switch to a tokenized model, to an API call kind of a model. And their customers, they are not blind, especially the large ones that eat large enterprise deals. They knew all of this. They had an ability to prepare. So, and those teaser rates as well as the pricing type changes were going to happen between 2025 and 2027. Now we're in 2026. So we're saying the last 12 months, we're seeing much faster enterprise adoption. Well, guess what? This is a very important factor that was actually happening here. And so the restacking of the entire tool set around CAD is what's going on. It's exactly what's going on. And I don't even have to throw AI in here. It's not justified by AI. It's amplified or maybe even accelerated with AI in the picture. But this would have happened regardless and in spite of AI, because the way that I am hooked and I mean, it's not even codependent, that I'm completely reliant on an incumbent that can dictate prices, that can change the pricing model, that can make me pay much larger for larger volumes. That's not acceptable. That's not something that, if you're anyway on a razor thin margin type of a budget, you want to have. So in this time frame, it was completely expectable that people are and IT departments as well as owners are going to reevaluate their IT stack. That's exactly what's happening. And that, in my opinion, is one of the key reasons why the ACVs all of a sudden shift to proven players. And I think that's the second thing. Literally in 2025, several players became enterprise ready. And that was not the case a year before. So I think we're actually moving into a very interesting window of confluence where the enterprise readiness and the enterprise adoption readiness are hitting each other. So that's, I think, is what's going on.
Patric, you often say you don't like to make predictions, but well done on this one.
Yeah, well done on this one. And honestly, it wasn't hard to foresee. So this one was completely logical. And you didn't have to make a ton of assumptions.
Nice. The other interesting thing, so I teased that there was also, with regard to the Consigli acquisition, there was this discussion on how it was rationalized, etc. I think it sort of was teased in the part of your article that you just shared. I think from our sources, what we gathered is the way the uh, acquisition was rationalized as a responsible use of capital. Was the claim was presented that this sort of tech stack is something that not AECOM or anyone else as an incumbent in the industry was capable of competing with, right? And I think also the claim was made that unless they take this in-house, it represents an existential threat to the company. I don't remember if these were the exact words. I might be paraphrasing, but the spirit was not too dissimilar from what I just said. And I think that is something I feel like you and I have been saying for the best part of 2-3 years now, that eventually something like this will happen. For me, it was, I must say, I was surprised to hear that, but it was also eye-opening that now, and this was as of late 2025, we had a very major incumbent. I mean, as prominent as it gets in the architectural and design phase, AECOM, actually going on record saying things of this sort, that they need to acquire this firm, and if they don't, it's an existential threat to their business model.
That is literally on the record. That's literally what they said.
I see. So that is quite incredible. Just think about the enormity of that statement and what that represents if a firm of AECOM stature is making statements of this sort.
And to be clear, so we have public access. It's not fundamental access. If you speak Norwegian, you can literally look these now, or use a translating service, use your LLM, etc. You can literally look these numbers up, because in Norway, every company has to publish their numbers. So I'm using literally publicly available data. This is nothing about fundamental data. So when you go to the Norwegian corporate registry, you can look up Consigli's numbers from a year before the acquisition. Yeah, so it's not day off. It's a year old information, but we all know like what growth can and cannot look like. So actually, it was a company that had shrunk in revenue by almost 50%. They had $1 million in fiscal year revenue, ending a year before the acquisition, roughly. And that was minus 50% from having 2 million fiscal year revenue the year before. And out of that revenue, judging by how the numbers were structured and presented in the public registry, it was 50% subscription. Roughly, don't nail me down on that, don't at me. Roughly 50% subscription is what it looked like to me, and 50% services. That's not, I'm sorry, but when you go by just numbers based, nobody would pay $400 million for this kind of revenue and margin revenue and revenue composition. I left out the margin here because anyway, it was a burning business, as most high growth startups would be. In this case, there was no growth until the year before. So we don't know how the last 12 months up to the acquisition went. It could have 10x'd, maybe 40x'd. It's not very common to do that. So my best guess is this was not a momentum acquisition. My also best guess is this wasn't a numbers-based acquisition. My best guess is this was a product acquisition. This was a team acquisition because AECOM felt, to point out or double underline and connect with what you said, this is not only an existential threat. If we acquire them, it is an immense opportunity in their view. I'm leaving my commentary out of here, just commenting on let's say how they probably approach this acquisition. Let's have the product and let's have the team. Forget the numbers. This is why we're buying it. This is the assets, and we can build on that. And that is incredibly bullish. Incredibly bullish on AECOM's part.
And I don't want to take specific names at this point, but interestingly, Patric, and I think this goes back to where we started with this episode and this discussion. I think leading into Consigli's acquisition and since, I'm seeing a lot of incumbents in that sort of general space quickly signing up big ticket deals, 6-figure deals with various companies, both within our portfolio and elsewhere, Patric. So, I have to also caveat, this is not just praising our portfolio. There's other companies we are in touch with, different parts of the world, who are also quickly closing large deals with these firms. So it does seem to be there is a bit of a snowball building up in favor of the best performing firms around the world.
I mean, so you're saying it's the acquisition actually was another accelerant, another generator of momentum to commercial adoption.
It could be that. Now, what if, because look, I think at the level of these incumbents, not all factors are visible, of course, to you and me. What if, so it might be that the acquisition is the accelerant, but what if there were other accelerants in place and this acquisition is only the first of multiple events which are the result of other accelerants?
I find that much more plausible. Much more plausible. We I think as a venture community, even as a society, it's very easy to make fun of large enterprises, etc. But Shub, people in large enterprises are not fools. They are not idiots. They have the same amount of idiots as anywhere represented in society, at least by my experience. So it's the opposite.
I mean, look, I will say this. People, let me not name the firm specifically, but people, say a lot of things about Revit. You can go back in history and check what Revit was doing when it was acquired. It was not doing much in revenue at all, right? Apply whatever revenue multiple you want to today, and you can figure out how much strategic value it has delivered to its acquirer.
Absolutely.
It's been a tremendous investment.
So those were executives with a lot of foresight. It was the opposite of stupidity or tomfoolery or whatever, right? So that you're exactly making my point too is, hey, these are highly professional. Now, can we make fun of them of sometimes being wrong or sometimes being too slow or not aggressive, not ambitious enough? Sure. I mean, but we can make fun of the startup ecosystem for other reasons, etc. These are highly professional organizations. They will generally have an idea why they are doing things. They could be wrong about it, but they will have an idea of why they are doing things. Sometimes it's maybe short-term incentives. We can have all of these conversations, but it's not random. It's not arbitrary. So that means that most likely it's not like, oh, there was this big acquisition, let's all now rush into these big contracts. No. This was actually going on in parallel, and this was just the first symptom of what's building underneath, what current is currently already building up, what tsunami maybe is even building up under the sea surface. I have enough signals to say I actually think that tsunami is already happening.
Yeah.
And Consigli being maybe the first wave that hits the shore. So to me, incredibly exciting time, I have to say. And I just to segue us here into the third and final part of the conversation, I think there's also, and I'd like to tie it to your point about Revit, there's a lot of foresight that now acquirers and intelligent and entrepreneurial acquirers can actually apply to the space. Because if you think of the long term, how do you build a 100 billion or even $1 trillion business in CAD? And maybe even wider in design for our markets, the project economy. Multiple directions that I could take this conversation in that I find interesting and even connected. But the one that I want to take it to for this conversation is, I believe there's a brain and a heart that is required to build such a business. And the brain is the ontology and the data infrastructure of geometry.
Mhm.
And the heart is the authoring tool of geometry. These two together will form the system of record, the ERP. I call it the bathtub, but that's now I'm now living in two different metaphors. But just to use my old, let's say, previously used term bathtub as well, they would be that, right? And so because they are the ERP and the SOR, and they are the data pipelines in between, you can literally now build everything around it. You can now have a full stack, fully connected, and fully interchangeable experience, and it needs to live in the browser. It needs to be multiplayer. It needs to be concurrent. So all of these things are technically completely advanced to what Revit is. So Revit actually represented that for Autodesk, the exact same thing, just not in a let's say in an older generation of technology for the last 20 years, except that it didn't have the data infrastructure. It didn't, or let's say to a degree, but it didn't have it in a way that it's actually connectable to everything. It didn't have let's say the ontology that people actually need, or that is flexible enough, especially not for construction projects. It's more, I think, where you could say that is a bit in the feasibility stage maybe. But so if you can actually build that, or acquire that and build around that, I think that's one of the directions that you need to go in order to build $100 billion to $1 trillion business. And flip it the other way around. I actually would say that the first company in this space that can raise 100 million or more will actually be or put itself into the place to be the consolidator of this. And so if it's a data infrastructure company, one of the best moves is buy the best authoring tool. If it's an authoring tool company, it's one of the best moves is purchase the best data infrastructure company. If you're a PE fund listening, maybe that's a strategy you find interesting, although I will advise any founder not to take your money, but that might be what you want. And if you're a PE fund disguised as a strategic, as an incumbent, maybe this is what you're already thinking. If you have this brain and this heart of the future, you will have the technical foundation to actually be a $1 trillion company in this space. I'm firmly convinced of it. This is what you need.
I couldn't say it better myself. I think that's absolutely brilliant. And I think, look at how today's, as okay, I don't want to say Magnificent Seven because this doesn't apply to all of them, but look at how the way firms like Microsoft have evolved, Alphabet have evolved. It is their own manifestation of what you've just described. I think allowing them different bathtubs to fully allow all the value to get captured.
Yeah, and it needs to be really generic and generalistic. So I'm not particularly interested in authoring tools that work for one part of the process. Let's say an authoring tool that works for feasibility. It doesn't carry. It doesn't carry across. It's not that. You need a abstracted generalist tool on the authoring side and one on the data infrastructure side that can cover all of it. And these tools exist in the market. I will not name their names. I know which they are. And I have bet a lot of money that actually both of them will coexist for a long time. And then one of them, at some point, we will see how consolidation around that will happen. It's incredibly exciting. And the connection to Consigli is they will not be valued on revenue only, although revenue is growing very quickly in these firms. They will actually be valued on strategic value and a very long forward promise.
Yeah, and the strategic value also entails being the one with that prized asset within your value, which now your competitor doesn't have access to.
Yeah, because the companies that I work with, I would not advise the founders to let go for any too cheap price or any price that is like rooted in, oh, what are you doing for me this year? You're letting go of way too much value. This is going to be transformational for this industry if you're one of these two companies.
Yeah.
Super.
Yeah.
Great discussion. Exciting times. Very much
Indeed,
momentum.
sir. Indeed.
Okay, sir. Let's continue monitoring and enjoy our bets.
Sounds like a good plan to me, sir.
Cheers.